Hey, good afternoon, everybody. Again, here's our continuous crude oil chart. Just a few little tidbits of information. Obviously, it's a new year. Happy New Year, everybody. The expectation is with the new year, we're going to see new money. And I'm not sure that I'm a firm proponent of that idea. The trade is very bullish commodities right now. Same kind of story as last year. Everybody thought we'd see all this new money come in right at the start of the year to run prices to higher highs. It looks like a lot of this early trade is probably some rebalancing. We've got a lot of funds that need to reallocate assets to and from different commodities, and that's probably what you're going to see the first few days of the year. But after that, all bets are off. Recent years have suggested that we do rally a little bit at the early part of January and then see a correction afterwards. I think that's probably what we could see here. Looks like we were saying that this little trading range that we were in a few years ago is basically between about $86 to $87 on the low end and $100 up on the upside. And I still think that $100 area is going to be a longer-term target. OPEC has been hinting that $100 a barrel is now fair, and they've been walking up what's fair over the past few months. So, first $80 is fair, then $90. So now $100 is fair to them. I think we'll hit that target eventually. But I think short term, maybe we'll see a push up to this $94, $95 barrel area. But I do think that we could see a good setback after that, and maybe cleanse the market a little bit, get back to some deeper long-term support. I wouldn't even rule out a push down to the lower $80 a barrel area, maybe 80 to 82, and use that as our springboard for a good longer-term bull run through the rest of 2011. Here's your short-term February chart. Again, the trend is up. It looks like this reversal that we had late last week at $89 a barrel, I think that's a very key area to watch. And let's let this market go up in the short term, but when that point is violated, I'm going to be looking to be on the sell side of this market. Either that or we're going to look for a reversal in price action or possibly some kind of a doji to signal the first downward turn here in the market. Other than that, I did not prepare a chart for the dollar index. Too many clients calling today asking what the thoughts are to start the year. But honestly, I don't know what to tell you about the dollar. We're in a sideways trend right now. Over the past couple of weeks, I've been trying to iterate to you guys that the market will fake multiple breakouts, and we did it again last week. We took out recent lows just to hold support right below it, turned back up again. I think today's high and low right now are roughly between 50 and 38% retracement on the charts. So we really haven't done anything on the charts, and this is a very tough market to call. Right now, you could argue that we could see some strength in the dollar because things in Europe are a little bit worse for the time being than what's going on here. But it's hard to wrap your brain around how much money has been printed and how hard it's going to be to get away from the idea that the dollar should devalue because of that. So I'm really not going to give any kind of direction on the dollar until I get some kind of a stronger signal here within the next couple of weeks. And maybe from that point forward, after I've got a little bit higher confidence, I'll give some kind of direction there. But I really don't have much confidence in either side of the dollar trade at this point. So.